Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we're about 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell. It's our global simulcast. We're joined right now by Carol Massar, and a hearty welcome to Scarlet Fu, filling in for Tim Stenovic today. And we welcome our audiences across Bloomberg Television, Bloomberg Radio, and on YouTube. Taking a look at this market, Carol, coming off 6 straight days of declines. We have a pretty strong day here, up more than 2%. Only 11 stocks in the S&P 500 in the red.
It's pretty remarkable, right? But, you know, depending on the day this week, it looked like things were all coming undone or things were starting to look up like they are today. So a lot of volatility, no doubt about it. It does make me wonder about something Doug Sioka of Kavar Capital Partners just on with Scarlett and me. And he said this week, despite the hawkish Fed meeting and all the rhetoric that we're hearing from Fed officials on hawkish moves to continue, the terminal rate projection has dropped every day this week, which he thinks is very, very telling, Scarlett.
It could be very telling. There's also so many people
wondering.
Well,
that maybe we're done. Maybe like things are starting in terms of.
It's a big question mark at the end of the day. No one can even determine whether there's actual disorder in the markets. Janet Yellen says there isn't. Larry Summers says there was in the UK bond market. He says he sees risks of breakdowns to come. If that's the case, people are kind of putting that on hold for today at least.
There's a lack of disorder? Is that what you said?
Is there disorder in the markets? It's a really simple question that no one can answer.
I'm going to answer it, yes. I mean, you don't get a 25 basis point move on a 10-year yield after going up 10, 15 basis points. That's not orderly.
I really love the UK market this morning when they jump 100 basis points on the long bond in the last 2 days and then plunge 100 basis points on the day. But Scarlett, your point is taken, and that the confusion and the cross-asset signals that are out there, Romaine, it really is this bond volatility and the whipsaw within these markets. I
like Scarlett. You think I can trade punches with her?
Bones to pick?
Yeah.
She can hold her own.
I'm tired of beating up on Carol. All right, here we go, guys. We got the closing bells here. This is actually a pretty phenomenal day, no matter how you cut it, whether you think this rally has legs or not. Still pretty impressive. 15 stocks in the S&P 500 finished lower, 488 higher. You put it all together, you got an S&P 500 higher by 1 point, basically 2%. We're going to round it up here on the day. The Dow Jones Industrial Average up by more than 500 points of 1.9%. The NASDAQ Composite higher by more than 200 points or 2%. And the outperformer on the day, that belongs to the Russell 2000, higher by 3.2%.
I'm just happy because Romaine might be moving on from picking on me. What? No, but we are seeing some conviction, certainly when it comes to volume behind the moves in the Dow and the S&P in particular today. Look at the S&P. Let's dig a little bit deeper. Most names, we'll hear more about that in just a moment. 488 to be exact. Higher today, 15 lower, none unchanged.
Can I just real quickly?
Yeah.
We haven't had a day like this in terms of the percentage of gainers out there. Going back, I think, to 2018, and I'll double check this. That was December 26, 2018. That was when every stock but one in the S&P 500 rallied.
That's a long time.
Yeah.
That's a long time.
I will let you beyond the S&P 500. You look at the number of advancers versus decliners on the New York Stock Exchange. 11 stocks higher for every one that is down on the NYSE. That only brings us back to July 19th in terms of a broad-based advance. So the smaller caps maybe not seeing it, even as the Russell 2000 gains more than 3%.
Take a look at where we are on a sector level as well. This is somewhere that we can really look at the depth and the breadth of this market. Carol, I do this for you. It is all green on the screen except for one at the bottom. Let's start there, if we will. It's technology, hardware, and equipment. You're only off about 0.7%. Even the, quote, worst performers are actually still in the green. It's a lot of utilities and household products typically get a boost when yields fall. So the math, of course, there makes sense. Come and climb up to the top here. Some of the, quote, best performers. Every sector is up more than 2%. The big outperformers, energy, media, and entertainment as well, along with some of those consumer durables and those retailers, all up about 3.5%.
Look at all that green. Gave me so much to choose from when it comes to some of my gainers today, but I had to go to Biogen. We've been talking about it all day here. This stock pretty much closing just off its highs of the day, still with about a 40% gain. We know the news, top in the S&P 500, top of the NASDAQ 100, gaining about, I think, $10 billion in market value alone today. And it has to do with its experimental medicine in partnership with Asahi. That's a Japanese pharmaceutical company, showing that it significantly slowed Alzheimer's in a phase 3 trial. It really just lifted the overall group, I should say.
And I'm really into it. I mean, this is a big deal, of course.
It's huge.
All the debate about sort of the amyloid, whatever you call it. And of course, what was it, Pfizer and the big debacle that we had with the approval where everyone...
But this has been a tough nut to crack in the medical space, in the healthcare space, Alzheimer's, as you know. And so to see some optimism optimism in a big way, especially in phase 3. That's significant.
Right, and the CEO of SI, the Japanese company, basically said that this actually proves that the theory actually works. Now, whether the data will back that up remains to be seen, but he's optimistic.
All right, so we're all in, investors all in on Biogen. I also want to mention Netflix. This one up more than 9%. Speak about all in. It feels like all of a sudden the Wall Street community is all in on Netflix. Also top in the S&P 500 and NASDAQ 100. Atlantic Equities, latest to turn bullish on the outlook in its new ad-supported tier. So they upgraded it to overweight and lifted the price target to 283. Stock closed at 245 and change. And I did want to mention DocuSign. This one also an outperformer, up more than 5%. It is about its restructuring plan. The board at DocuSign saying, okay, go ahead. It's going to cut current workforce by about 9%, some charges of 30 to 40 million, with most of that happening in the third and fourth quarter. And then Scarlet, it expects that restructuring to be substantially completed by the end of 2023. So this one, again, a big outperformance there.
Okay, so looking for underperformers was kind of hard today, but I did find Apple. It's unavoidable. It's at a 2-month low. Global Equities Research calls Apple's plan to ditch iPhone production. That was a Bloomberg exclusive. It calls the company the first casualty of recession and says the collapsed demand is just the tip of the iceberg, and says maybe 500,000 layoffs in the Apple supply chain over the next couple of months, which would be huge if it comes to pass.
Who said that?
This was Global Equities Research.
Oh.
Yeah, I hadn't heard of them either, but I was intrigued by the 500,000 layoffs.
I'm intrigued by that too, because it seems like a lot of people are trying to dismiss this as just as a nothing burger. I guess they feel like Bloomberg is just, overplaying this, but the reporting looks solid to me.
There's a lot of jobs at stake. Yeah. Also looking at VF Corp, which owns brands from Vans and North Face to Supreme and Timberland, basically teenage boys, my son, cutting its full year outlook, and Romaine, now sees revenue up 5 to 6% versus 7%. What was interesting, of course, in addition to blaming things on the macro uncertainty, is excess inventories, which means probably discounted goods later on this year.
A new pair of Timbs for Christmas.
There you go.
Does he wear Wranglers, Romaine?
I know, right?
I haven't seen Romaine in anything but a suit, so I couldn't answer
I've seen him in
I'm
Crocs
too much of a
before.
snob for
He's got a pair of Crocs, if you ask nicely.
God, did you go blind after that?
What color are your Crocs, Romaine? And just a quick mention of SQQQ. This is the 3 times inverse leverage ETF on the Qs. Whatever the Qs do, you take the inverse of that times 3. No one wanted to be short the NASDAQ 100 today, and you could see that this ETF had a big decline. It was the 3rd most actively traded ETF in U.S. markets.
A lot of outflows, right? We were talking about that earlier.
Yes, Emily Graffeo was telling us there are already outflows the last 2 days, so there's a little bit of expectation that we'd get a turnaround Tuesday. That didn't happen, so we got Whiplash Wednesday instead.
Whiplash Wednesday is a great way of putting it, because if we look across the cross-asset perspective, this would have been a very different color if you come into us this morning, because we had, at that point, a strong US dollar. You had most of your commodities falling, and now it is a sea of green. We look at commodities with WTI up more than 4%. This is more of an inventory story at the moment, worrying about Russia supply, global supply, inventories. WTI pushes up more than 4%. We've, of course, got natural gas pushing up high, even though we think demand will be crimped by that all-important impact of that Cat 4 hurricane over in Florida, but natural gas pushes up 3%. We see, of course, massive moves in Europe once again as we worry about the Nord Stream 2 implications. But this is really where some of the currency focus has been. This has been an extraordinary volatile kind of day. Bloomberg Dollar Index now weakening by a percentage point. That, after the Bank of England comes and rides into the rescue, trying to diminish some of that extreme volatility and indeed the extreme implications of a bond yield that had crushed so much higher on the long end that was going to have implications for the pension funds and long-term investors. We therefore have dramatic moves higher in the euro strengthening by 1.4%, the British pound strengthening, but every currency really versus US dollar went higher. And then look at these extraordinary moves that happened. 100 basis point move on the 30-year in terms of your UK gilt. I mean, leaves us breathless, Taylor.
Hugely breathless, and it really has been the story of the day, Caroline, as you mentioned, starting overnight in your UK, and sort of the ramifications and the contagion that filter into the big story of the day today, and that is the huge plunge within the U.S. full faith and credit as well. Remains 16 basis points down on a 2-year yield, but you're still at a 4.12.
Yeah.
The 5s and the 10s are where you're getting the stickiness, 24 basis points down and below that 4% level, but you actually had a 7-year bond auction today that was very well received, despite the weakness in the 2s and the 5s yesterday.
Right, but then this is the other thing too. When you look at that repo facility that we had a little bit earlier, the reverse repo, excuse me, and you sort of realize, okay, people are still piling into cash here, or staying in cash, if you will, here. So there's a big question here when you talk about the conviction in this rally and whether it has legs. The idea that there are a lot of people, as of today, that are still allocating heavily to cash.
Big question is, so what happens tomorrow? Does this rally hold? Does it come undone? What kind of volatility do we see?
Scarlett, answer that. Yes or no?
If I knew the answer to that, I wouldn't be here.
She'd be
well, I mean, I think one thing we can all agree
important.
with is that the volatility that we've been seeing across the board, cross asset-wise, I don't think is normal, and I think that's going to keep a lot of people afraid, at least on the sidelines, until that volatility tamps down.
Yeah, we'll see what the economic numbers play out too, and see if that impacts the trade. All right, guys, that's a wrap for this Wednesday trade. Quite a rally on Wall Street.
Hi, Scarlett.
Good to be back, guys.
We'll bring her back again. Our cross-platform coverage, radio, TV, YouTube, we call it Beyond the Bell. We will see you again, same time, same place tomorrow.